You're watching ABC4 News with Emily Flores, Glenn Mills, and Alana Brophy.
Some promising financial news tonight. New numbers show consumer prices aren't rising as quickly as before.
And that could be a sign inflation might be slowing. Washington, D.C. correspondent Alexandra Limon has more.
That report does offer some good news to consumers because it means that prices didn't rise as quickly as economists had actually predicted. The latest Consumer Price Index report shows that in October, consumer prices rose 0.4% from the previous month and were 7.7% higher than the year before, beating economists' expectations.
Mainstream economists are saying this is a really positive sign of the resilience of the economic recovery.
The annual price increase is the lowest since January.
We think that the data that we saw with CPI is a step forward.
White House officials acknowledge prices are still too high and put many Americans in tough positions.
The key is to start moving in the path towards where you need to get to, and that's what we saw in this report.
We could see setbacks along the way, I realize that, but we are laser focused on it.
Despite the better than expected CPI report, Michael Gapin, the head of U.S. economics research at Bank of America, says the Federal Reserve is likely to continue raising interest rates to get inflation down to 2%.
So the Fed is saying, yes, it's probably worth trading off some weakness in the labor market for long-term stability in prices, but that's certainly not a decision they're eager to take.
While those interest rate hikes do help to lower inflation, they can also have some negative consequences like the layoffs that we're starting to see. And so the fear is that that could send the U.S. economy into a recession. In Washington, Alexandra Limon.